Well, good morning. Tony Virtue speaking here, Virtue and Partners, with my thoughts on what's been going on in the markets over the last few weeks. Interesting times as always, and driven by political events in the short term. These things do happen from time to time, and currently two fairly significant events. The Brexit situation in Britain, which I'll speak about in a moment, and then our own domestic election around the corner. I've just returned from London. As you can see, the accent still is there, even after 28 years of calling Australia my home. Interesting times there. I think the vote will be very, very tight. And I should mention overnight the sad news of Jo Cox being murdered in Leeds is a terrible, terrible thing. And so they've all stopped electioneering at the moment. Look, my sense is they'll probably scrape across the line in that British way, but the reality of this, and it's 50+1 is all you need to win this referendum, is that there is significant disquiet. On one side, you've got the advantages of being part of the union with probably better economic prospects. On the other side is the loss of sovereignty and border control, and you know, quite interesting if you look at the map in the attachment, just to see how Europe has grown. And if you compare that to a business, you know, sort of lots of little takeovers have happened, and then control has changed, and people feel a bit isolated. And I think probably more important than the immediate situation is, will there be other potential exits down the future? Will other economies say, well, look, we want our sovereignty back? I think markets will probably take it in its stride, and from an Australian perspective, yes, we have Australian companies with significant business interests in Britain, but I think it will take it in its stride. And really, from our own perspective, news from China probably will impact our markets far, far more. So for the million Australians who can vote, you have to pull your finger out and vote now, and let's see how it goes. And as I say, either way, it shows us quite a lot of disquiet with the current arrangements. Domestically, finally, we have an election in a couple of weeks, which I think will be a relief for all of us. I think we need certainty. The market's certainly looking for certainty, and not so much in the House of Reps, but in the Senate, and to be able to know that if we get legislation through, that it'll actually be followed through there. So let's hope we can get a clean result there. In the short-term markets, we'll look to arbitrage these situations. There's a whole industry of people who try to make a quick dollar in hedge funds, and so expect some volatility. But again, look at fundamentals. Markets do stabilise over time, and this is certainly not a time to be panicking. To my mind, the fundamentals remain the same, that capital is very, very cheap around the world. You can borrow money, certainly in London at the moment, if you want a mortgage, it will cost you 2%. So capital is very cheap, but labour, conversely, is very, very expensive. So those trends aren't going to change anytime soon. As we come to year end, well, irrespective of how superannuation policy plays out, try and maximise your work-related super if you're able to this year. It's only going to get harder. Those of you in a capacity to look at borrow money for margin lending in the mid-5s at the moment, and that's a deduction to you. Now, the major banks are paying a higher dividend yield than that, plus franking credits, so the jaws there are positively geared from day one. So yes, there's some volatility in potential capital growth or not of the underlying investments, but cash in, cash out looks very, very attractive. So as I see it is stay safe, watch this play itself out, and life will go on, and I'll see you next month. Take care there. Bye-bye.